Well, we put it to the test yesterday. Yes, we drove our Tesla with full self-driving all the way up to Big Sur, which is where the road breaks now on Highway 1, around the curves and by the cliffs. And yes, I was a little bit more nervous with the, 500-foot cliffs on one side of the road, but we let it go all the way so far on the trip. I don't know, probably a couple, 300 miles of FSD driving. Couldn't be better. And we're on hardware three. So there you go. The stock market this morning has been in pretty good shape, and Tesla's been in really good shape. We'll tell you why in just a second. Tesla has been strongly up all morning, and at first I was like, "What's going on?" But if you kind of noodle it out, it tends to make sense. Now, first of all, I think there's some options expiring today. I'm not going to count that in the reasons. Uh, but Elon Musk did say this in responding to James Dalma. He said the FSD software update next month will be a major step change improvement for rare conditions. This will substantially reduce the need for driver attention, but some complex intersections, some heavy weather or unusual events will still require attention. And it says also to note that the Austin Robotaxi FSD build is 6 months more advanced than what is available in cars in America. And there are some additional things that it can do that our cars can't do. This is from that, so I would count that as number one. Number one is Elon bringing us up to date and giving us a little narrowing in the timeline. We know he says 3 to 6 months before we'll have unsupervised. We're expecting this next update on FSD at the end of September, and these will be significant. And he's giving us some details. So I think that would be number one reason for some additional feeling, people putting a little more money into the stock. Yahoo Finance has this. It says, despite recent legislation that has rolled back electric vehicle and other renewable energy tax incentives, one analyst believes that Tesla will continue to be profitable in accordance with his $400 per share price target and the stock's overweight rating. And that would be, of course, Alex Potter. And he was quoted in Teslarati. He says he thinks Tesla will earn $3 billion in zero emission credits, only 500,000 less than 2024 this year. So it's only going to cost, he thinks, that this whole business of the ZEV credits will only be a small, well, $500 million is a lot of money. I'm sorry, it says 500,000 less. I don't think that's right. I think it's 500 million. Anyway, Potter says that even with the one big beautiful bill's cutting of EV incentives, such as $7,500 federal tax credit on qualified EV purchases, the effect on the EV Titan will be slight. Tesla will be looking at around $3 billion in these ZEV credits this year, followed by $2.3 billion in 2026. Potter said, and that's according to an ex post, as I said, on that was quoted on Teslarati. In early 2025, Tesla sales saw record declines in early 2025, in part due to CEO Elon Musk's polarizing involvement in U.S. politics. However, developments like Tesla's robotaxi service, which had recently been updated and expanded in Austin, Texas, as well as the company's continued efforts to perfect the full self-driving system, have sparked optimism for the brand. Despite ongoing efforts, concerns still remain the safety of Tesla's supervised FSD systems and other autonomous features. In our view, according to Potter, these favorable FSD-related developments are likely to overshadow any and all negative commentaries arising from the 2025-2026 estimates. So there you go. I think that would be reason number two would be Alex Potter coming around and saying that he's encouraged by in general, by the way things are going with regard to robotaxi and FSD, and also that it's not the ZEV credits are not going to hit nearly as hard as people might have thought. And Teslarati also had this. Elon Musk has confirmed that Tesla is stepping back from its Dojo supercomputer initiative and focusing instead on the company's in-house AI5 and AI6 chips. The update was initially reported by Bloomberg News, which cited people reportedly familiar with the matter. As per Bloomberg, Peter Bannon, who led Project Dojo, will be departing Tesla following Elon Musk's decision to shut down the initiative. The publication claimed that Tesla's Projo, it's easy for me to say, the publication claimed that Tesla's Project Dojo team had lost about 20 members recently, and the remaining members of the initiative would be reassigned to other data center and compute projects within Tesla. Dojo is expected to help Tesla train its autopilot and full self-driving systems. With this change, Tesla will reportedly be increasing its reliance on external partners for its training hardware. These partners reportedly include NVIDIA, AMD, Samsung, and other companies. Now, what they're not saying in this report, which was very, very important, and some other people were mentioning, Elon Musk had already brought this up at the second quarter earnings call, and he talked about the fact that the AI6 chip will not just be used for inference, it will also be used for training, and that the Dojo computer will not be built out of AI6 chips. So I think this might have just been the next step in the process of switching over to this other method, which is probably less expensive, doesn't need the same amount of expertise. In a series of posts on X, Elon Musk explained that it doesn't make much sense for Tesla to divide its resources to scale two different chip designs. And since the company is putting in a lot of effort on its AI5 and AI6 chips, which would be used not for training, but for actual products like Optimus and the Cybercab, it was time for Project Dojo to take a bow. No, it's going to be used for training also. And that's a complete mistake. Now, that was not a quote of Elon. That was somebody making a kind of what they believed Elon was saying. Now, this is a quote. It doesn't make sense for Tesla to divide its resources on and scale two quite different AI chip designs. Well, that's like saying the same thing again. In a supercomputer cluster, it would make sense to put many AI5, AI6 chips on a board, whether for inference or training. There you go. Simply to reduce network cabling complexity and cost by a few orders of magnitude. One could call that Dojo 3, I suppose. The difference in real-world performance between AI4 and AI5 is far more than any chip version I've ever heard of by a lot, Musk continued in the post. It was real good. So there you go. There will be reason number 3 is reduction of staff, reduction of complexity, more simple, able to do more with less, which is, of course, the Musk way. All right, so those will be the 3 reasons. These are not reasons necessarily, but maybe contributed. I don't know. Sawyer Merritt says this: Tesla has officially been granted a rideshare license in Texas, which means Tesla will be able to operate its robotaxi service under new regulations governing autonomous vehicles in the state. Now, you'll remember that back when they were starting services on June 22nd, a number of state legislators wrote a stern note saying, gee, you guys should wait and comply with the new Texas rules and not start your operation until, I think it was September 1, maybe it was August 1, I can't remember. I don't remember offhand. But anyway, and Tesla said, never mind, we'll just continue to go as we're doing it. Now they have passed that licensing, all those licensing requirements. The license recently became necessary. Oh, that would have been September 1, regulates rideshare operations. Then again, this could have a minor influence on the stock today. This is Sawyer Merritt again. News Italy has approved new subsidies worth almost 700 million for the purchase of EVs. The ministry will offer up to 10,000 euros, $11,650. $11,650 to individuals and up to 20,000 euros to small firms, covering up to 30% of the total purchase price of a new electric car or commercial vehicle. To qualify, users will have to abandon or scrap an internal combustion vehicle of up to the Euro 5 emission class, dated from 2015 or earlier. So a little cash for cars, cash for junk, or what do we call it in California? I can't remember now. So this is Randy Kirk. Please hit the like button. Please hit subscribe and notify. And I probably have, who knows? I might even have a program tonight if there's something exciting to talk about, and how much I recover from my trip. Yeah, it's been a very easy trip, by the way. And then we'll be doing normal stuff all weekend. And so that's why you need to hit the notify button, and of course, join up on Patreon. Market Watch has this: the numbers. Revolving credit, mainly credit cards, declined for a second straight month in June. Revolving credit fell at a 1% rate in June after a 3.5 drop in the prior month. Declines in credit card borrowing are rare. The last time revolving credit card fell for 2 straight months was during COVID 2020. Total consumer credit rose 7.4 billion in June, up from 5.1 billion gain in the prior month, but it was up less. Okay. Economists have been expecting $7.4 billion gain instead of the isn't that say 7.4? Okay, they expected a 7.4, which is what they got. All the gain in consumer credit was driven by a gain in non-revolving credit, which is auto and student loans. Non-revolving credit rose at the 2.7% rate after a 2.9 rate in the prior month. A lot of this, of course, student loans. The Fed's data do not include mortgage loans, the largest category of household debt. The big picture, consumer spending has slowed sharply since last year. I do not agree with this. That is not what the banks are telling us. That is not what the credit card companies are telling us. This is incorrect. Consumer spending has not slowed sharply since last year. Economists think that trend will continue as modest gains in income struggle to keep up with higher prices on imports. This is also incorrect. We have all the data that proves that inflation is not going up. Inflation is going down, and in fact, income gains are outpacing inflation 100% since the beginning of the Trump term. We've got that. We've mentioned it here several times. I'll be happy to show you the charts. And why does it say this? It's just nonsense. Looking ahead, our working assumption is that consumption grows by about 0.5 in the third quarter now. But we have the Atlanta Fed saying that the GDP is still, right now, this is, numbers for today, 2.5, and that is what it's been this week, up from 2.1 at the end of last week. So that 2.5 seems like a pretty good growth rate to me, and we know that 65% of the GDP is consumers. So I'm sorry, I'm not seeing the consumer slowdown here. Oh, what about inflation? Well, what we got this morning from Trueflation is 1.77. That is up an entire 0.2% from 1.75 yesterday. No, you know what? It was 1.76 yesterday. So it's only up 0.1%. And it's at 2.06% year over year. So we're looking at Trueflation numbers right now, right today. We got inflation down to what the Fed is requiring. And we've got 47% is where Trump is right now, sitting. He is, that's again, the low in his range. So he hasn't dropped below that 47% yet. And then we got the VIX this morning at 15.71%. That is down sharply. So the VIX is getting back into a very risk-on situation. Tesla is sitting up 2.81. It's been more than that earlier. At $331.33. We have got the Dow Jones up 0.17, the NASDAQ up 0.59, and the S&P up 0.47. So, and everything is flattish, including Tesla right now. Tesla's been moving around the $30 to $33 range for a couple of hours. So that is where that's going. We got the Magnificent Seven completely mixed this morning. Actually, it's not completely mixed. We got basically Amazon down a little, Microsoft down a little, and the rest of them are up. We've got the Cathie Woods are all down except for 𝐼𝐸, and it's barely up, which would say what? It might say the bonds are up, and you would be right. So we had a 30-year auction yesterday, and so we had the 10-year auction. I think that was on Wednesday. And the 30-year auction yesterday, both of them went soft. They didn't get a lot of buyers, and so they were soft. And so the interest rates popped up. So we're up almost 4 basis points this morning to 4.283. Now, 4.283 is still not terrible compared to where we were. And so maybe we'll see some stuff that will help us to continue the trend down rather than the current 2-day trend up. But not surprising to see it popping up as a result of those not great bond sales. We got oil sitting up 0.23% this morning at $64. That's solid. Natural gas down 1.83 back to $3.01. And gold all-time record highs this morning, up $40 at $3,493. After that drop back, it just popped up back again. I think this is what the overall equities market is going to do. I continue to believe it needs at least a 5% pullback so that it can go up again, kind of like gold did. We've got silver up 0.67 this morning at 38.55. That's only a buck off of its all-time high. And copper's right in the middle of the range, sitting at $4.47 this morning. We've got the dollar firming, it says, but we'll probably get a weekly loss. And we have Bitcoin down 1,180 at just about 116,000. Those are the numbers this morning. Always like to go back and take one last look at Tesla to see if there was any movement since we did all that. And Tesla is still, like I said, up and down, 331.67. That's all I got for you right now. Nothing to refer you back to. Nothing. I don't know if I'll have a show tonight, so nothing to tell you about for tonight. But tomorrow morning, for sure, it all goes back to normal. 3 shows a day, every day. It's been great talking to you.